Okay, everybody, let's go ahead and get started here. Appreciate the patience on us we've been very busy getting all of our ducks in the row for 2026. And so I plan to have our regular webinar on Thursdays starting next week. It should be a little bit more consistent. Okay. Okay, let me hang on one second. Okay, there we go. So this week, I'm going to present to you the risks that I'm seeing in this market. This isn't something that I typically do. This is something that we did at the end of 2024, just warning of the risks. We really backed that up with an extreme cash position in late 2024. And I suspect that we'll start building cash again relatively soon. So I'm just going to walk you through these risks, and you can just take it as you will, agree with me or not. But I just, you're paying us for analysis, and this is the analysis that I want to present. First off, this rally that we've seen in 2025, in April 2025, is one of the most historic rallies in market history. Now, from a return standpoint, not really, but in virtue of how direct it's been, with no pullbacks or really major dips at all, it's very, very rare. In my world, we'll measure a pullback based off of what's called retracements, like Fibonacci retracements. And what do I mean by that? You measure an uptrend, say October 2022, all the way to the February 2025 high. So this drop right here is not random. What you do is you measure the length of that uptrend, and these are pretty standard. These are your important Fibonacci numbers. They show up in markets all the time, the 38.2, the 50%, the 61.8. And you can see that if you measure this uptrend, the drop in February really hit that 38.2 retracement of the entire rally, held, and then took off. Most rallies, even historic rallies, will see dips along the way that will test the 38.2, sometimes the 50%, definitely the 23.6% retrace. That's a very, very shallow dip. Since this market bottomed right here in April, and you go forward, there isn't a single moment where this market even tests the 23.6. It came close there. This dip didn't test it. Didn't test it. This is the 23.6, this black line. See, didn't test it there, didn't test it there, not there. Not one time have we seen a dip test or even break through the 23.6 retracement. That is extremely rare. I've gone back through market history. In 125 years of market history, there's only one other instance that we've seen a rally this vertical that didn't test a 23.6 retrace for as long as we have, which is 9 months. And that was in 1999.